Guys, PayPal, Google, AMD all reported today. PayPal started the day. They beat on revenue. They beat on profit. The stock was down over 12%, I believe, at the end of the day. They were supposed to hit $8.3 billion. They reported $8.37 billion in revenue. They were expecting $1.14 earnings per share. They reported $1.19 earnings per share. Growth overall for the company. The CEO was very optimistic in his words, but the stock is down big today. Mo, do you have any idea why that is? Are you looking at pulls up the quarterly reports. Now remember, guys, we don't care about short-term quarter-to-quarter results. It's fun to look at it. It's fun to get excited about it. But today, I own PayPal. Don't own a company just because I do or anybody on the internet does. We're here to teach a principle-driven process that you apply to your own investments. I own PayPal, and I was zero scared today when the stock fell 12%. All I thought was, ooh, it might fall further. I'll be able to buy more shares. Mo, what are these results here they're showing? Because I'm looking at this, and it's looking pretty decent.
Everything looks pretty good. I mean, the top headline, it basically says we had a strong finish and a successful 2024. We're going to carry the momentum into 25. And then if you look at these results, net revenues increased 4%. Transaction marginal dollars increased 7%. Everything increased. And if you come over here, this is their PowerPoint presentation. I was interested to see Venmo, obviously. Look at these numbers of total growth year over year, 17%, 18% full year. I don't see it, even eBay increased 2%. So I'm not really seeing where the negativity is coming from. I didn't look like on X to see what people were saying about it, but even their forward guidance was still good.
Pre-market initially popped. It was like up over 90. It was like up to over 92, 93 bucks, I think, initially. And Mo, look at this. Finished the day down 13.17%. Wow. That's a big fall.
Even if you look at their transaction margin for the first quarter, their guidance going forward for 2025, 3.6 to 3.65 billion. That's 4 to 5% growth. Around the entire year, they're looking at the same thing, 4 to 5% growth.
Well, what was their branded checkout? The branded checkout was the reason for their issue. What was their growth in branded checkout? Because that's kind of where they're trying to compete with Apple Pay. It's about sitting there and saying, hey, do people use PayPal to check out? Guys, I'm not going to lie to you. I love PayPal. I use it as much as I can when I need to. But when it comes to a quick checkout, I just prefer to do Apple Pay. That is a concern. That's what I want PayPal to kind of fix. But when it comes to sending money, things like that, Venmo is just so freaking easy. When it comes to buying things that I worry about in terms of who am I buying from, especially internationally, I love buying through PayPal. It is so wonderful, in my opinion. What'd you see here, Mo?
I mean, I guess, so branded checkout, let's see. There's a lot of different numbers here. Like branded checkout transaction revenue on Venmo specifically was up 4%.
That's not a lot.
No, that's not. I would expect it a lot more there. I'm just searching.
That's probably what everybody was. That's what drove it down big time. That's what drove down the stock big time today. But guys, remember, I look at investing as I always say, and I want you guys to think about it in this way. If you're looking at buying larger companies, like most people do, they want to buy the S&P 500, things like that. You want to buy companies that have staying power, ones you have to spend less time on. Now, if you want to make absurd outsized returns, you got to go to smaller companies. You got to go to companies that everybody's missing. Sub 1 billion, sub $2 billion companies, because analysts aren't going to spend their time following those companies as much as 20, 30, 200, $300 billion companies. Now, you have PayPal here that had an all-time high of $310 per share in 2021. Guys, that would have made the stock essentially a $320 billion company. It is now down to $80 billion. But since then, revenue and profit are up. That's what's amazing. What are you seeing, Mo?
So I can't really figure this one out. It's saying right here, driving progress across key initiatives, win checkout, scaling highest converting checkout experiences, 25% of US branded checkout traffic on upgraded experience.
So here's my thing.
I'm not sure what that means.
If they can figure out a way that we can do the same thing with Apple Pay, if they can make it easy for me to just tap my phone, that's all I need. And by the way, you might sit there and tell me, Paul, they have that. And shame on PayPal for not making it obvious to me.
Well,
you know what I mean?
I think that Apple has that advantage. I mean,
no, they definitely do.
You know what I mean? Apple can easily say, no, we're not letting PayPal do that. We're not letting Venmo do that.
So when people tell me Apple Pay and PayPal are competitors, they're not.
They're not.
Apple Pay is a facilitator of if you have a charge problem, if you have a question on a charge, you're not going to Apple. With PayPal, you can complain to PayPal and say, "Hey, this company ripped me off," and also your credit card. That's the difference there, right? Yeah. And I look at Venmo also, and there's some concerns about Venmo, but either way, guys, one of the things I wanted to look at here is analyst estimates. Mo, why don't you look in the report for anything else of note that you want to mention? But looking at these analyst estimates, not a ton of growth. $5 a share this year, growing to $7 a share in the next 3 years. And revenue growth, mid to high single digits, 5.5%, 6.5%, 12%, 10.5%. So growth, but the funny part is I kept hearing people say PayPal is a dying company. Well, I don't know if it's dying when you have revenue that's increasing, but maybe I'm wrong. I mean, look at this. Last 12 months, $31.5 billion. 2023, 29.7, 27.5, 25.4, 21.5. So not glamorous, but it's still growing. And this is what we want to find. We want to find companies where the perception is death, but the reality is still growth, albeit low growth. PayPal's not, they're not sitting there and writing letters home saying we're killing it out here at boarding school, right? They're just sitting there saying, okay, we're doing okay. Mo, what'd you find?
The only other thing that I found of note was that they returned $6 billion to stock holders by repurchasing 92 million shares during the full year of 2024.
So let's see if that's useful or not. Currently, their price to free cash flow is 11.3. 11.3, Mo. They are killing the free cash flow game. Now, Stock Analyzer tool. Guys, for those of you who are new to the channel, might be seeing us for the first time, the Stock Analyzer tool is where we merge the story with the numbers, because in our principle-driven investing approach, our fifth pillar, if you will, about principle-driven investing it's my fourth pillar. A great story can become a bad investment if you pay the wrong price. Just like a Ferrari can be awesome, but if you pay $1 trillion for it, it is not awesome anymore. If you pay $1 for it, you're going to kill it. It's the same Ferrari, but different prices makes it better. It makes it different, whether it's a good investment or bad investment. Same with the stock. We use the Stock Analyzer tool to merge those things together. You take the story, you put the numbers in here that match the story, and it tells you the right price to pay for that story. Now, I always tell people, you start with Stock Analyzer tool and you end with Stock Analyzer tool. When you start with Stock Analyzer tool, use it to say, hey, are we even in the ballpark? Because guys, if a company is selling for $77 a share, and let's say we get a value of $12 for PayPal, you are wasting your time by going out and looking at more information on PayPal. Just put it on your watch list at $15. When it hits there, then you start doing more research. Your time is limited. This will help you save time here. So the last time I did PayPal, when was the last time I did PayPal, Mo? June 26th.
Damn. It's a long time ago.
I did a 10-year analysis. I did 4%, 7%, and 10% revenue growth. I have profit margin in here, even though clearly free cash flow is greater than profit margin. I have 12.5, 14.5, 16.5. Free cash flow is 16, 20, and 24. And here's the thing, Mo. In the last year, their free cash flow percentage has been 22.5%. We hope that can keep up. Now for PE, I put 14, 17, and 20, and I did a 9% desired return. And the other thing, Mo, their ROIC is increasing. It's still slow at 11.91. It's nothing to make me write home about, but it's still increasing, which is a great thing. So $77.73, I hit the analyze button. This is why I'm interested.
Still makes sense.
On a discounted cash flow model, 78, high side 230, middle side 137, current price return would be 17.3% annualized return if my middle assumptions all occur and the balance sheet stays the same. So these are things that the whole point is, this would tell me, Paul, go do more research. Is this worth your time to look at? Is this worth your time where the lowest assumptions are still 9% return? That's what we're looking for here, is margin of safety. Remember, guys, this 9% is only to find my intrinsic value. You got to put a higher number for your margin of safety. So let's move on to Google, Mo. What do you think?
Yeah,
I've heard Google is falling. Let's see what Google is doing right now.
It's down about 7%.
Whoa, down 7%. Guys, 7%. The Googly Moogly is down 7%. They reported $96.5 billion in revenue, missing 96.7. They reported earnings per share of 215, beating 213. I think the guidance and the results on cloud computing were not bueno. Mo, can you confirm that?
I mean, it says Google Cloud revenues increased 30% to 12 billion. I don't know what expectations were. I'm just reading it right off their press release. Google services increased 10% to 84.1 billion. Consolidated Alphabet revenues for the quarter increased 12%. Total operating income increased 31%. Net income increased 28%. These are some big increases. I don't know do you know what the expectation was for the cloud revenue?
Yeah, I'm looking at it right here. Alphabet falls after disappointing cloud sales drag on revenue. So Google parent Alphabet posted fourth quarter revenue that missed analyst expectations. Sales, blah, 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 blah. Investors have urged Alphabet to demonstrate that it's maintaining momentum across its businesses as it spends more heavily on AI. And it's saying here that the missing on cloud sales. And by the way, Google Cloud is third behind Microsoft and Amazon. So they're really hoping that Google, because of its AI play, is going to really be able to generate a lot more revenue. So clearly missing on that has really what's hurt them quite a bit. And guys, this goes to show you how important AI is. Google Cloud only missed by $200 million. You might sit there and say, that's a lot. No, it's not. They're expecting to make 12.26 or 12.16. They brought in 11.96 or something. That's less than 2%. That's how we laugh at this. They missed on one component of their business, albeit important, and now they're being shot down 7% because of that. On a $200 million miss in terms of, and by the way, look at that revenue. They missed by $200 million on total revenue. I mean, guys, in the short run, stocks are a voting machine. In the long run, they're a weighing machine. That's another pillar of ours, the fifth pillar of our principle-driven investing. It's really important to understand, even though it's hard to ignore quarterly results, embrace it as a way of just like enjoying it. See what the company's doing, but don't get yourself caught up in the excitement and the depression of seeing your company miss or beat. Just like I said, PayPal just beat on both revenue and profit, but they missed on, they guided poorly on how they're doing at the terminals, and therefore they're shot down 13% a day. Maybe it's the right move, maybe not. I don't know. I just look at the saying, in the long run, if you told me PayPal's profit's going to 5x from here, the stock's probably going to more than 5x. I think it's undervalued currently. Same with Google, same with these other ones. So if you love Google at $200, you'd absolutely be in love at $193.52. That's what's important to remember here. Stock number 3. Let's pull up AMD's nuts. What do we have in a minute? AMD is now down 3.33%. Revenue of $7.7 billion, beating expectations of 7.53, and $1.09 EPS, in line with estimates of $1.09 per share. The company is off from its all-time high, 227.30. Just last week hit 112.80, and now is down to 115.81 after hours. Mo, what are you seeing here? I mean, look at this, Mo. Price to free cash flow of 125 with declining free cash flow. PE of 107. I mean, this is expensive for a $200 billion company. This is like freaking Palantir over here. What are you seeing over there in the report?
They had record revenue of $7.7 billion. That's an increase of 24% year over year. I think
24% year over year. For
a company, and AMD is not like it came around in 2021. This is probably, when were they founded?
Like 1990. So I don't know. Mo, can I show you something? Can I show you something? In 2019, all of 2019, they did $6.73 billion in revenue. This last quarter, they did $7.7 billion in revenue. Yeah. And guess what? Last year, what did they do in the same quarter? What was it? This was for the fourth quarter, right?
Yeah.
So in the same quarter, they did 6.17, and they just said 7.7. This is the world we live in. Company increased its revenue 24% year over year. The stock is down 3%. Whether that's right or wrong, it doesn't matter. It should still boggle your mind after beating on revenue and being in line on earnings. Correct. Keep going, Mo.
Yeah. I think I'm just looking at a story here from Yahoo Finance. Of course, they're talking about the tariffs from China. And then the big thing that I think people think about is their battle with NVIDIA. That to me is kind of it's like a 1 and 2 battle there. They've always kind of been that 1 and 2 battle. So I think it's going to be interesting when people start comparing those two a little bit more as AI develops.
All right. Well, AI, this is going to be a battle among chip makers of what's going to happen here. I mean, AMD has been a company that's been around for a long. I mean, Mo, this company. Wow. Annually, let's see here. Going back to, man, look at this, Mo. In 2005, it did 5.85 billion in revenue. In 2015, it did 4 billion, less revenue. I mean, it just goes to show anything can happen. Now it's up 6x in terms of revenue since 2015. I don't know. It's interesting.
Listen to this full year summary. So this is year over year, 2023 versus 2024. Revenue up 14%, gross profit up 22%, operating expenses up 8%, operating income up 374%, net income up 92%, earnings per share up 89%. Damn. Sounds like a company that should be falling in stock price.
What's it at now? Let's see what it's at right now, just for fun. 3.36%. Guys, the market's fickle. We're here to teach a process that helps you not care about the short run, focus on the long run. When I say long run, I don't mean the taxable long run of 1 year or more. I mean 5-10 years out at least. It'll be an easier world to live in. Yes, you're going to make less money betting on bigger companies that you can buy at good prices. And if you want to have smaller companies, we have that in the community as well. If you want to use these tools, go to our website, everythingmoney.com/sign up, or click on the link in the description below. $7 for 7 days. Guys, thank you very much for your time. See you on the flip side.